afternoon, everyone. It is Sunday, April 3rd, and this is episode 57 of Odds Are, your S&P 500 weekly market forecast. All right, let's take a look at last week's chart. All right, so a couple things. We'll start off with the settlement range. So we did close within the expected settlement range of 44.11 to 46.15. After briefly going up above that 46.15 level earlier in the week. Second, we did breach the 45.78 upper breach point. So we did have a breach of the breach point, which should have come as no surprise since we did not have a breach in the week prior, and so the chances or the odds were 93 point something, that we were going to be above, that we were going to breach one of those 2 points. So no surprise there. And then the market, I'm going to say, did not move as I predicted because I gave it about a 70% chance that we would breach the 44.54 level, not the 45.78, although I did say I wouldn't discount the double breach. And I mean, obviously we ran out of time, so it doesn't count, but we did breach that 45.78 and then turned around and started making our way back down. Unfortunately, the week ran out before my prediction could come true, but that's all right. I'm not mad about it. So that was last week. Let's take a look now at the moving averages. All right, moving averages, short term and medium term, are now both bullish, but the long term is still bearish. So that's, obviously last 3 weeks we've just been kind of up and away. The long term takes the longest to roll over, so no surprise there that we just recently entered into bearish territory on the long term just 3 weeks ago. So it's going to take a bit to get it back out of that bearish territory. No surprise. Now on the short term and medium term, look for some more changes here. I don't think we're going to stay bullish on both of these over the next 2 to 3 weeks. I'm expecting either the medium term to go back to neutral or even the short term to switch back to neutral. It doesn't just stay green all the time. Now, maybe I'm wrong, but that's just kind of how I'm seeing these moving averages fluctuating, especially with the volatility in the markets. All right, and now putting this together into our view for next week. So these are the critical price points. Look at that clustering of all of those critical price points. This does not happen very often. It's kind of a mess. There's just a lot going on right above that 4,600 level, which to me, that 4,600 level is going to be some very serious resistance. That 4610 is the upper breach point, 4614 is the upper settlement limit, and 4619 is the parabolic SAR, which if we close above that, that becomes a very bullish indicator, and then we're in parabolic up mode. But, honestly, looking at this, there's almost equal chances. Look at that, 79.02% chance that we're going to close within the expected settlement range, and 81.3% chance that we're going to have a breach of one of those two levels. So, looking at this setup, and matter of fact, before I make this call, let's switch over into the relative view so you can see it better how I'm visualizing it. All right, if you look at this chart, notice the big space between 44.81 lower breach point and 44.10. 44.10 is going to be at that area of support, which is where that red midline is at, of the Bollinger Band. So there's plenty of room for this market to go down, breach 44.81, and then still close above 44.10. There's not a lot of room between 46.10 and 46.14, and then you got the 46.19 up there. There's just a lot going on. You've got that yellow shaded area there, which is the area above where the dead cat bounce failed to breach through a couple weeks ago. So we've been kind of layering that in. So I'm looking at this, and with the downward momentum in the last 3 days of the week, I think we're going to be going to 44.81 as the breach point, still closing above 44.10. I just think there's way too much going on at that 4,600 level or just above it. So looking at this chart, I'm going 44.81 for next week. Notice also that the yellow shaded area we talked about, if we closed in or above that area, it would be very bullish. Well, we, poked up into the range and we were up there for almost 3 days at some point or another, and then we came back down. So it seems like the yellow shaded area rejected the price action and sent us going back down, which you guys by now should know that when we get rejected off the top of the Bollinger Band, the next place I'm looking at is that midline. So we've got rejected off the top of the Bollinger Band. We're going back down, magnet effect, heading back towards that red midline. All right, and now didn't see that one coming. So 2 things. One, 100% correct about having a breach this week, because in the week preceding it, we did not have a breach. So high probability trade. That is still one of my favorite ones. 93% chance it would happen, and it did happen. So that one, I sure hope you saw that one coming, because I did. The one I didn't see coming was my call was 70% chance to the downside, and this week I'm actually going to double up on that. I'm going to say it's about an 80%. I'm going with the 44.81. I'm saying we're going down to that lower breach point because there's way too much congestion and way too much going on right above that 4,600. So that's my call for this week, and let's wrap it up with the quote of the week. And this one is by Mr. Jesse Livermore. He's a day trading pioneer. There was actually a book, Reminiscence of a Stock Operator, that was written. It's supposed to be based loosely on him. There was some speculation that it was actually based on Jesse Livermore. It was never really stated clearly. But anyways, Jesse says there is a time to go long, a time to go short, and a time to go fishing. So this, especially as we get into the spring season, we've got spring break, we've got, just everybody looking forward to the warmer weather, trying to go outside, enjoying the time. That's okay. Like, we can do that. And I am just as guilty of this as anybody else. But we have to give ourselves time to recharge. We have to be able to step away, and we don't always have to have a position on in the market. We don't always have to be trading, searching, grinding, trying to find that next opportunity. It's okay. There is a time to go fishing. Another way of looking at this was you can be in the market, so you can have a position where you're long, you're short, or you're neutral, or you just don't have a position on. Like, not having a trade on is a position. That's a neutral position, and it's okay. So just making sure that you guys remember that as you go into this period of nicer weather, and hopefully you take advantage of that and don't get stuck watching the screens and basically stuck inside your own head. So hopefully that helps you guys. Enjoy your week. I will see you guys back here next week, and we'll see if the projections came true. All right, guys, take care.